Available inventory of homes for sale has likely bottomed for the season, with a tiny uptick in inventory over last week. As we move later into January, the signals for the year start to get stronger. We're hearing lots of anecdotes from realtors around the country reporting much healthier buyer interest than last fall. Of course, last fall, the buyer interest was about as quiet as it could be. So the question is whether those interested home shoppers actually choose to buy this spring. And we know that sellers, for sure, are holding back, and inventory remains very tight around the country. Every week, of course, Altos Research tracks every home for sale in the country. We analyze all the pricing, all the supply and demand, all the changes in that data, and we make it available to you before you see it in the traditional channels. If you aren't using Altos market reports with your clients, your buyers and sellers right now, might be a good time to step up. Go to altosresearch.com, book a free consult with our team because everybody is worried about what's happening in the market right now, and they need you to help them see clearly. There is a link in the description below to connect with us. Just a reminder, the data we cover here in these videos is national, and Altos tracks every zip code in the country. So join us to dive in. I'm Mike Simonsen. I'm the founder of Altos Research, and here's what we know for the second week of January 2023. Available inventory of homes for sale ticked up just a tiny fraction this week to 473,000 single-family homes. It's such a tiny move that you can't even really see it at the far right side of this chart. In early January, it's not uncommon for inventory to be at its seasonal low right after the holidays. So next week's numbers should see a bigger increase as more homes get listed for the spring. In the last 2 years, the pandemic years, inventory kept falling all the way into like March or April, but that was totally unusual. But as mortgage rates have risen from the pandemic ultra lows, buyer demand backed way off, and that allows inventory to build now in January like previous normal years. The first of the spring market's new listings arrive in January, and inventory starts to build. This year, there are not a lot of new listings, and so also not a ton of buyer demand either. So we're just seeing just a little bit of inventory climb. Next week, as I said, we'll see a bigger jump in inventory. Home buyers will have an easier go of it this spring than they've had at least in the last couple of years. But you can see here that in January 2020, we had 737,000 houses on the market, single-family homes. So we have 36% fewer than that available now. I've said this a few times, but I'll repeat it here. There are no signs anywhere in the data that any big flood of inventory is coming. Home buyers right now have limited competition. So you don't have to fight for a home like last year. But there's also probably no reason to wait in hopes of like some sudden better selection to arrive. Spring, of course, will bring more inventory, and total inventory will climb closer to the pre-pandemic normal levels later in the year, especially if rates stay higher, 6.5 or 7 or higher. But that inventory growth is not coming suddenly. And here's what I mean by that. When we look at the new listings each week, this week, the U.S. saw about 46,000 single-family homes get listed for sale across the country. A handful of those took offers immediately and are no longer on the market. But compare that to last year at this time, when 56,000 homes were listed for sale the second week of January, but 17,000 of those were sold essentially immediately. And in this chart, each bar is the count of new listings in that week. The light portion of the bar are those that went into contract immediately, within hours or a day or a few days of listing. The immediate sales phenomenon was the defining characteristic of the pandemic, the home buying frenzy when mortgage rates were so incredibly low. You could see how much bigger The light portion of that bar was last year than it is now. Last year's inventory hit record low because the new listing rate was low and demand was off the charts. Now, new listing rate is actually even lower, but demand is much cooler. So this is what I mean when there's nothing in the data that says there's a lot of sellers coming. There's nothing in the data that says there's a lot of sellers coming. The two big catalysts for what might bring a slowing market and bring more inventory would be rising rates and perhaps rising unemployment. Both of these numbers recently have been trending better for the housing market. So where would that inventory come from? So as of right now, there's nothing in the data that's showing that we're going to have a big flood of new listings. We'll spend more time with the inventory projections for the year and look at some of the macro influences this week in our Thursday monthly webinar. In the webinar, we have about an hour to go deep into a lot of this data. We'll look at the different local markets. Some of those local markets are behaving differently, and inventory is rising. So there's a link to register for the webinar in the description below. Click that to join us. These webinars are limited to 1,000 attendees each month, so you got to click that now to reserve your spot. The new sales rate has also turned the corner for the season. So we have 238,000 single-family homes in contract right now. That's up just a little from last week. The number of homes in the pending status is very low right now. This reflects buyer activity from last fall. Homes can take 30, 60 or more days in that contract pending process. So we have 34% fewer homes in contract now than we did last year at this time. Each bar in this chart is a week with a total count of homes in contract. The light portion of the bar are those newly in contract that week. You can see how much lower each bar is right now than last year. Last year, this time is the dip right in the middle of the chart. Since these are homes whose sale will complete in the future, you can be sure that the headline data on the home sales that you'll see for the next several months it's going to continue to be very bearish. We're going to keep an eye on this data, the pendings data, over the next several weeks to see if those home shoppers that I mentioned are actually buying or if they're just shopping. After the first of the year, the better new listings start coming to market, so home prices start to see their seasonal rise. This week, the median price of single-family homes in the U.S. rose to just under 1% to $409,000. For the active listings, that's still plenty above last year at this time, which is actually interesting to note. Last year's bidding wars meant the ultimate sale price was higher than list. And now we're back into a normal situation where the final sale price is a little under list price on average. So there's a little bit more variability in the data compared to last year. But it's still really interesting that the prices are holding very solid for this just the second week of January. The median price of the new listings this week declined to $375,000 after last week's oddly big jump. I wouldn't read too much into this. We have very few new listings each week, so the median price may be a bit noisy, this light red line. What we're looking for in that light red line here is how quickly it climbs over the next few weeks and for the rest of the quarter. It can bounce a little bit, but this is the reading of what sellers know about their potential buyers in their market, and they price accordingly. The most important thing to take away from the price chart here is that the most bearish scenarios for home prices are just not taking place. Sellers and listing agents know where the demand is, and in aggregate, they price to sell. So it's early January. Home prices just starting to turn around in their normal seasonal pattern. If you have a buyer on the sidelines who's like waiting for some home price crash, we can already see in general across the country that it's not happening. In the webinar Thursday, we'll spend some time looking at the local markets where we can indeed see home prices declining. There are plenty of those places around the country, but on the national scale, there's no panic. We can measure a demand in the direction of future sales prices by looking at the percentage of homes on the market with price reductions. This number, frankly, has been falling faster than I would have expected, given how few buyers were out in the fall. So 35.8% of the homes on the market right now have taken a price cut recently. In this chart, each line here is a year. You can see the tight band of normal price cut behavior around 30 to 35% of the market nationally. You can see the 2023 start at the far left end of this chart. We have fewer price cuts now than at any time since July. The buyers are still few enough that in this market that I wouldn't expect this year's price cuts curve to get back down to that tight band of normal, the pre-pandemic years. But again, this is a sign that sellers are not panicking. That it tells us that smart, properly priced listings are getting their offers. It's also a signal that overpriced listings have no chance. But I don't know. I suppose I don't need to say that, do I? So much to cover this Thursday in the hour-long Altos Research webinar. Lots of local variations in the markets that we'll cover. Some of those are behaving very differently from the national data I've shared here. Join us this Thursday, January 19th at 10 a.m. Pacific, and we'll go deep. There's a link to register in the description below. As I mentioned, these are limited to 1,000 attendees, and we get way more than that each month that want to join us. So you can still get your spot. Register at the link below and then show up right at 10 a.m. Thursday. Okay, that's all the data we have time for this week. If you need to communicate about this crazy market to your buyers and sellers, go to altosresearch.com. Book a free consult with our team. Learn how to interpret the crazy data for the people who need it most now. They need you to be the expert. So we'll see you Thursday.